This video is sponsored by Moomoo. If you guys want 15 stocks, each up to $2,000, all you got to do is use my link down below or go to stocksurfest.com/Moomoo, deposit at least $100, and boom, you get your 15 stocks, again, each up to $2,000. And if you guys don't like the platform, you can take out the $100 you initially deposited and you keep your free stocks. It's that simple, and all those links, by the way, down below, guys, do help out the channel. And with that being said, let's dive into the video. So today, like you all probably know, and as you all probably expected, we had a red day in the stock market. We had the S&P 500 close down 1.1%, Russell down 1.4%, NASDAQ down 0.8%, which, funny enough, the NASDAQ held up the best today, and we had the Dow close down about 1% as the VIX went up over 5% on the day. And if we take a look here, SPY has rallied, it did rally into the close, and so did Triple Q. We'll take a look at that in a second, and then we'll talk about some companies that reported earnings. We'll break down some charts, so make sure you all stick on throughout the video. SPY was at 381 at about 2 p.m. on the East Coast, and it closed at what? 384, so it ran up about 1%, 0.91% heading into the close, as Triple Q in that same time period, let's pull it up, this went from about, 286 to 289-ish, which it ran up about a little over 1% heading into the close. So that was a nice push for the bulls overall. But you guys know the bears are still in charge. I mean, nothing has really changed overall in terms of, the grand scheme of things here on the 5-day chart. Bears are in charge. 10-day chart, you guys clearly see that. The 20-day chart, and this is on Triple Q, by the way, and obviously it's the same thing here on SPY. So even though we had a little push into the close, guys, we closed red today. Markets aren't looking good overall on the longer time frames, and today was the first day of the 2-day Fed meeting for September. Tomorrow we have the press conference at, I think, 2:30 p.m. on the East Coast, the Q&A, and we all know for August we got hotter than expected inflation. It was supposed to be flat. You guys know this. Maybe you don't. I'll tell you now. It was supposed to be flat for August, and it came just a little bit above flat, 0.1% for the month, which completely shocked the market. That's what sent SPY from 415 to about 393 in a day, and Triple Q from about, about 313 to roughly 292, 293 in the span of not even a day. We're talking in the same trading day, right? So that caused the markets to come down a lot, and clearly we are seeing a lot of this negativity being priced in. Clearly, a lot of the negativity is being priced in to the point where Jerome Powell, who knows, is he going to stick it to the market and be extremely hawkish tomorrow and be like, forget the market, screw the stock market, I'm coming in hawkish, and 75 basis point, maybe 100 basis point in the future? Is he going to come in with a very hawkish stance? If so, this market will probably price in even more damage. Maybe not damage to the if they raise rates, that's going to cause more damage, and if they're more hawkish, that's going to cause more damage in the short term of the stock market. So if he takes that stance, I think we're going to collapse probably to about 270 on Triple Q, and SPY is going to come down most likely towards, in my opinion, 360, 370 roughly. And if he does damage control, because he knows, the Fed's smart, Federal Reserve, Jerome Powell, they know if he tries to come in and do damage control, which probably will be what happens, I'm not going to lie, we might end up getting some sort of relief rally. Who knows? I'm not saying we're going to reverse completely to all-time highs or even to the highs from a week ago. Honestly, I don't think that's going to happen either. But could we get a rally, let's say SPY 385 to maybe SPY 395, 400? Could we get a rally from Triple Q, let's say 285 to about 295, 300? I think that's in the cards, especially if Powell tries to play damage control and he comes in, dovish. I don't know. There's obviously a lot of things that could go down. The only thing we can do is be patient and actually let it happen. We can't predict the future. We can't do anything like that, so we just have to sit back, chill, let it happen, and not overthink it, in my opinion. A lot of people go into these Fed meetings with some extravagant plan. you just can't overthink it. You got to let it happen, see how the markets react, and then you can make your decision. So overall, those are some thoughts, guys, how I'm thinking right now. And of course, as always, for long-term investments, guys, nothing really, let's just put it this way, the Federal Reserve, for my stock market investments that I'm looking out 20, 30 years, what the Fed does right now in the next month, couple months, year, 2 years, it doesn't really change my long-term investing philosophy, right? I'm still going to be dollar cost averaging into the S&P 500, into some international funds, into some mid-cap growth. I'm still going to be doing that. Whether the Fed's going to raise rates, do this, do that, do this, do that, I'm still going to be doing that, and I'm still going to be buying my nice quality companies, or at least ones that I think are at good values, at good prices. And that's what I'm doing. I'm sticking to the basics, guys. These are the principles that I'm going by. And maybe I'll do a deeper video on my overall kind of investing, trading philosophy right now, where we are now, how I'm making through these, how am I making it through these turmoil times, times filled with turmoil. I'm mixing up, the grammar's all screwed up, guys. You know what I'm saying, though. You know what I'm saying. So what do you guys think? Seriously, let me know your thoughts in the comments, and make sure to hit that like button. Let's try to run the likes up on this video. Let's try and make 100 likes standard for the channel. If you don't see the likes at 100, we got to get it to 100 for every single video. Let's make that a goal, guys. So let's talk about now some stocks. We have a couple companies that, quite honestly, I forgot about that reported. The first one is AutoZone, AZO. I think they reported on Monday, yesterday, and I completely forgot to cover them. And if we zoom, or scroll rather, down here, we can see they did EPS of $40.51, which came in a lot higher than last year. They did $35.72. Let me see here what the estimates were for the quarter. Are we not seeing it? Where the heck is it here? Oh, there it is. $40.51 versus $38.38 estimated. So they beat EPS, and sales also beat 5.35 versus 5.15 billion estimated. And same-store sales for Q4 were up 6.2% for AutoZone, which the consensus estimate was 3.4%. So that's interesting. They crushed that, crushed EPS, crushed revenue. Looks like they're doing stock buybacks. How much are they doing in stock buybacks? I lost the line. Crap. There's so many freaking lines here. Let's see. But it looks like JP Morgan raised their price. Wedbush, they're getting some upgrades. And the stock today went up 1.6% on the day. And, that's in the midst of a red day. I'd say that's really good. So AutoZone, AZO, we have a clear ascending triangle. You guys see this? We have higher lows being made. We have been making those for a couple of months, and we have resistance at about, let's see, 2250. So if we end up getting a pop back up towards above 2200, like I said in my last time, or the last video we covered this, I think there could be more upside. So pretty good earnings, nice same-store sales beat for AutoZone. This momentum could continue. Let's see how it ends up playing out, guys. So the next two are very risky. I'm going to say this right now, very risky. I think they're both penny stocks. I'm not pumping the penny stocks, guys. I'm not pumping the penny stocks. I'm just going to cover these companies though, because they reported earnings today. Number one is Stitch Fix, ticker symbol SFIX. This company, you guys probably know, was pumped by a lot of YouTubers in the bubble of 2021, 2020. It got all the way to $113 a share. I mean, can you guys even imagine that? $113 a share. Now it's at $4. It is down 95%, 97, 8%. I mean, this thing is not looking good. And today it went down 6%. So let's see what they reported. And now after the bell, oh my goodness, it is down even more. Let's see what they did. They did adjusted EPS, it looks like, of 89 cents in the red versus the 65-cent in the red estimate. So they missed that. And revenue also missed, 481.9 million versus 489.02 million estimated. So they missed EPS and they missed on revenue. I'm not seeing anything on guidance here. Active clients of 300 or 3,700,000, a decrease of 370,000 or 9% year over year. That's not good. So their active clients have decreased year over year. I mean, I guess that's why the stock price, one of the reasons why the stock price is getting just completely destroyed. And obviously, it was a bubble completely. I mean, you guys know. I mean, there's no reason for me to even explain it. You know, when the Fed was pumping in all that money, we all know a lot of the money was going into these unprofitable, speculative companies that were being pumped a lot by people on YouTube, and every retail investor and their grandmother was in them. And a lot of them were just way too speculative. They were in a bubble. And look, this is what happens, guys. Bubbles pop, stocks come back down to their intrinsic value, and who knows if this is even there. I mean, this intrinsic value for Stitch Fix could be $0 for all we know. It could be $1. Who the heck knows? But all I know for sure is they didn't do well on earnings. I'm staying away from them, but I had to cover them in this video because, again, they reported earnings, and I wanted to keep you guys up to date. And the next one here is Aurora, which is a legitimate penny stock. I think technically anything under $5 is a penny stock. The other one, Stitch Fix, was about $4. This is $1, guys, $1.40. Let me get some water, by the way. Cheers all to all the viewers out there. Aurora, which is an MJ company, Mary Jane. You guys know what that is. This is one that I've told you all before. I've owned. I owned it in the past. I sold it a couple years ago. Lost my shirt on this particular stock. And I learned my lesson, and I haven't owned any MJ stock since, and I don't plan on ever owning any of them again. But overall, they reported earnings, and the stock is down a whopping penny after the bell here, guys. Let's pull it up and see what they did. They did sales of 600, oh my goodness, that's not sales. That's a loss of $600 million. $600 million is what they lost for the quarter, and they did sales of $50 million, which is down from $55 million year over year. So their sales are down 10% roughly year over year. They lost $620 million on the quarter. They're obviously losing money hand over fist. They're bleeding every single quarter. I mean, I haven't done a deep dive into their financials in a while, but I'm assuming every quarter they're losing a ton of money, which is why the stock is reflecting that. You don't get to a penny stock status for no reason, guys. I mean, if a stock, it's a penny stock, there's a freaking reason. It's either a brand new company that is completely speculative, or it's a dying company that is, on its last whim, or it's, I don't know. But there's a reason why a company is a penny stock. And clearly, this one, there's a reason for it, because it's down, or because it's losing money hand over fist. They're losing revenue year over year. It's just a disaster. And if I had to bet and look at their revenue from a couple years ago, they're probably shrinking. I mean, that's not for sure, but I have to double check. But overall, Aurora is just, it's one that probably will go bankrupt, to be honest. And we'll see. Maybe we'll come back to this video in a year or two, and they went bankrupt, guys. Who the heck knows? So the next one here is Wynn Resorts, which we talked about Las Vegas Sands earlier. That one's starting to break out. Wynn Resorts is right there. If you guys take a look here, we have a clear inverse head and shoulders that played out. We completely filled the gap to about $68-$70. Well, not 70, more like 68 roughly. And if we do clear, let's say $70, there's a wide open breakout coming on Wynn Resorts. It's going to be at multi-month highs. We might be going up to mid-high 70s, could be going to about 80 something bucks a share. And this company, Wynn, same with Las Vegas Sands, they have a lot of exposure in China. So as things in China ease, hey, these stocks, they're going to be coming back, in my opinion. But if things go extremely south in China, and there's some things lingering over there in China for sure right now, it might go the other way. But overall, I'm watching Wynn. I'm watching Las Vegas Sands. MPC is another one that I'm watching, which is Marathon Petroleum. This one up 1% on the day, right around $100 a share right now, and it's sandwiched between the 50 and the 180 SMAs here on the 4-hour chart. And I think if we do clear above, well, we're not exactly at 100 now, but we're at 97. If we do start moving past 100, 101 a share, we start breaking out of the wedge here on the 4-hour time frame, we could see a push towards that 110, maybe 115 level here on Marathon Petroleum. Chewy is another one that I'm watching, guys. Chewy went down 9% today, completely collapsing. We have, move under the moving averages now. We have a death cross. And by the looks of it, Chewy is going to test the highs. We're already at the lows rather. We're already pretty much at the lows from the beginning of this month, being about 31, 32 bucks. If we do break under here, which I suspect we will, Chewy might be opening up as an interesting play. Again, maybe not as a short-term trade unless you want to short it, but as a long-term investment, because we called this one out. If you all remember, all my viewers out there that really watch the content, you know that back in May, June, we were talking about Chewy, how the valuation was pretty attractive at that point when the stock was in the low 20s. And it completely ran away from me. I called it out. It completely ran away from me. It went from 22. It ripped all the way to 50. So, yeah, it went up a ton from when we initially called it out. And again, I didn't get in. It ran away from me. And here we are. Now it's coming back down from 52 to 32. If this starts getting back to the mid-low 20s, I'm going to be buying Chewy. And I'm going to be holding it maybe more as kind of a short to mid-term trade. Not necessarily as a 3 to 5 year investment, but maybe as a couple month trade. I'm going to be looking to pick up Chewy there. We'll see. Of course, I'll keep you guys updated, and all you guys in my Patreon, which I haven't called it out in a while. The Patreon is linked right down below. I'm posting all my moves there, real time, morning videos. You get more direct access to me one-on-one throughout the day. That's on Patreon, link down below. Check it out. I'll update you all on there in real time when I do end up buying Chewy, if I do end up buying Chewy. And the last one for the video, which I might also buy here in the short term, maybe more as a long-term investment, it is Block, also known as Square. This is one that all my OG viewers know. If you were watching during the pandemic crash, this is one that I regretted not buying after the pandemic crash. In other words, when we recovered, when all the Fed money was coming in, and now that the Fed money is drying up, well, Block, Square is it's getting back to where it was during that pandemic crash. In fact, we're now under the levels that we were before March of 2020. We're right at where we were in February, at about, or under that. In February 2020, this stock was at about 80, 90-ish bucks a share. Now we're at 60, and the low from the pandemic crash was 32 bucks. So I think Square, if it takes out the lows here from, let me pull up the 4-hour, takes the lows out from 56 bucks from the middle of June, there's a chance that this goes mid-40s, and if it really gets ugly, 30s again. But we're not going to call that out yet because the technicals aren't showing us that quite yet, but we'll see. 55, 56. We got to watch it on the downside here for Square, as it is a big upcoming support. So with that being said, I'm going to wrap the video up, guys. If you enjoyed it, hit that like button, subscribe. Let me know your thoughts in the comments, and feel free to subscribe to my second channel called Stas Talks Money. I'll leave a link right down below for you guys. And if you haven't gotten your 15 stocks for Moo yet, don't forget, $100, just deposit $100 and you get 15 stocks, each up to $2,000. And you could also get 12 stocks from Webull with any amount deposited. All of those are linked down below. And with that being said, cheers, guys. I will catch you in the next video. Peace out.